Are you somebody struggling to figure out how to trade the markets consistently on a day-to-day basis? Well, look no further. Here at Tradedorks, we have multiple different strategies that are consistently profitable, and we're able to extract profits from the markets every single week. In this video, I'm going to be showing you a quick trade breakdown of a trade that I caught live on Euro USD. I'm going to be showing you the profits, I'm going to be showing you the entries, and talking you through a step-by-step of how we got involved in this position. Let's get straight on into the charts now, okay, and start off looking at the daily time frame. Okay guys, so here on the chart you can see that we've got Euro USD, and I'm currently on the daily time frame. So the first thing, okay, that I notice is that price is clearly in this bullish trend, okay? We are making a number of higher highs and higher lows, and of course we are consistently moving upwards. Now, of course, we need to identify potential areas of interest where price may look to end this trend, okay? We need to make sure that we are aware of places where price may look to potentially reverse. And what we can actually do is we can first of all identify areas of inefficiency. So which areas of inefficiency are of interest on the chart? So what I can actually see first of all is we have identified this area of supply just in here. So I'm going to start off by calling this a daily supply zone. Okay, and what makes this supply zone good, okay, was the fact that we also had this high point just in here. So what this high point is, okay, is of course an area of liquidity, and here you can see that we actually took that liquidity out, okay, in this area in here, and then we actually moved lower. Now, because we didn't actually tap into this zone, okay, I'm a little bit cautious now about the type of reaction that we're actually going to get from this area, unless of course we can actually refine this down to a lower time frame. So what I'm going to do is I'm going to just drop down to the 4-hour time frame now. Okay, and we're going to have a look at what this zone is actually showing us. Now, if we have a look in this zone, okay, in this area, what can we actually see? Well, of course, again, there are more areas of inefficiency that have been unmitigated. Okay, so if we have a look at this zone just in here, you can see that we have not had a tap in to this area. So of course, this is another potential area of interest. And on top of that, what makes this area even better is this area of liquidity. Remember guys, okay, it's very important to always be looking for liquidity when framing up trade ideas. Okay, it helps with the confluence of the trade and makes it that even more stronger that we're going to get some kind of reaction to that area. So continuing on, okay, you can see that we do have this area of interest. And of course, by understanding that, I now believe that price is going to continue to push higher. Now, why do I think that price is going to push higher? Well, there's a number of reasons, okay? Now, one of those reasons is, of course, the general structure, okay? Of course, we need to remember that the overall higher time frame structure is going to be where the general narrative is going to be moving, okay? But of course, we do have these areas of interest, which we just spoke about, which means, okay, it's another reason for price to push higher, take out the liquidity resting here, tap into the fill of the imbalance, okay? And then we may see some kind of reaction and move lower. So, okay, now we understand all of this. Let's just mark out now our 4-hour structure. Okay, so we understand that price is clearly in this bullish trend. So what we can do is we can see that we had this nice break of structure just in here. Okay, it's with a body break. We pushed through nice and impulsively. Okay, price then started to pull back. We came into the range. Okay, we had this great tap in just in here. Okay, so this can be seen as a 4-hour area of demand. Okay, and then ever since then, we've been continuing to push higher. Now, initially, okay, we could have been looking for trades on, say, the 1-hour time frame out of this area. Okay, so I'm just going to identify this area in here. And we can look and we can see that, you know, maybe there was a trade in here, but for how I personally trade, okay, there currently wasn't any entries. So how are we going to look to get involved next in the market? Well, what we can do is we can look for the next break of structure. So what we actually get, okay, is this nice change of character in here, okay, which is indicating to us that the market is starting to actually respect this area of demand, okay? We're seeing, you know, this nice strong impulsive leg to the upside, and it can give us areas of interest to actually trade. Okay, so of course when price comes back into this range, potential areas of interest could be seen as this extreme demand in here. Okay, so I'm just going to identify this area of demand, and then on top of that we also do have this area in here, okay, which you can see we did get a reaction out of. Now, why is this area of interest important? Well, of course, again, it is where this inefficiency started. And of course, it is the last down candle before the up move. So these are the two really important areas of interest. You can see that we did get a nice reaction out of this higher zone, which is absolutely fine. Okay, that's completely normal to see. Okay, sometimes they go to the extreme. And of course, sometimes they go to these zones a little bit higher up within that range. So now we understand this, how could we look to get involved in a trade? So looking at the chart now here, we can see that this is Friday, okay? This is Friday at 12 o'clock. So what I was actually looking at in this moment in time is I was trying to see how can I get involved, okay? I want to look for momentum coming into the market, okay? I want to see that there's buyers, okay? They're involved. There's more buyers than sellers, and they're ready to push this market higher. Now, one of those confluences that we're going to have to ensure that, price is ready to move higher is that we've mitigated into this previous range. So you can see here that we have actually mitigated into this range. Of course, we've come straight away back down, tapped into the demand, and now we're starting to push back towards this high point. Okay, so initially what I was looking for is, what kind of indication do I have that price is showing us those buyers are entering the market? And of course, if we look at these candles, what we can see is the momentum of each candle and how it closes, okay, based on the previous candle. So if we go back to this candle just in here, okay, what we can see, okay, is we had this nice bullish candle, okay? Of course, we've got this larger down candle, but if we just say this is part of the pullback of this larger push up, okay, we're now focusing on this up candle. So the next thing that I want to see is another impulsive move higher. So what happens next? Okay, this candle plays out and it closes, and of course we are again showing that momentum to the upside. So I'm now interested in this candle, okay, as the most recent kind of range in price. What we could do is we can put on the 50% of this candle. Okay, so now what I want to see is I want to see if price comes back into this area and then look for some kind of confirmation to take prices higher. Okay, so what we're going to do now is we're going to wait and see what happens next, and we're going to drop down to a lower time frame, because what I want to do is I want to try and identify a potential area of demand which we could use, okay, to see some kind of reaction out of. Okay, so what can we see here on this time frame? Well, there isn't really any kind of reaction on this time frame just yet. Okay, you can see that we don't really have a zone of interest on this time frame. I mean, we do have the inefficiency, but what I want to do is I want to see a down candle, okay, before the up move, and I also want to see that inefficiency. So again, nothing really here of interest. Okay, I'm going to go down now to the 1 minute time frame, and now if we look at the entire of this leg, okay, what we want to look for is what kind of demand and inefficiency are we seeing near the extreme of the move. So of course, what we can see is that we do have this area just in here. Okay, and you can see, why is this area important? Well, we do have this down candle before the push up. Okay, there's the inefficiency which hasn't been filled, so it's given us a really nice area of interest to work with. Okay, so now I've got, multiple confluences within this area. Okay, first of all, we have the impulsive 1 hour candle. Okay, we then have the 50% being tapped into, and we then may get a tap into this extreme area. Now, once we're in this extreme area, of course, we then want to see the confirmations that we can get out of that zone. So let's keep playing price out now. I'm going to keep it on the 1 minute, and I want to just see what happens next. So first of all, okay, we start to push higher. Okay, we do create another 1 hour candle, but then we do start to come back quite aggressively towards the end and the close of this candle. Okay, so that's absolutely fine, but what it leaves us with is still this extreme area of demand for us to work with. So what happens next? So let's keep playing price out, okay, and let's wait for price to tap in. So there we go. Okay, first things first, we get the tap into the area. So what do I want to look for? Okay, what kind of things am I interested in? Well, okay, there's a number of different entries that we could use, one of them being, of course, the double range mitigation. So with the double range mitigation, what we want to see is 2 impulsive moves, okay, which are closing above the previous range. So of course, if we were using this main up candle here, okay, as the current range, well, when price breaks above that current candle, this can be seen as range number 1. Okay, so price then comes in, it taps into that range. So again, now if we get another impulsive move, okay, that will then give us range number 2, where we can then look for our first position. So what actually happens next, okay, and we actually get this nice impulsive up candle. So we're going to identify this candle in here, okay, and now this could be where we can get involved. So we could set an entry in here, okay, stop at the low, and we could look to get involved in this position, okay. So price comes in, okay, it comes all the way down, and it stops us out. So this is fine, okay, this is a valid loss that I was happy to take based on the situation that we were in, okay, and based on the number of different confluences, okay, based on the momentum, the higher time frame narrative, all of these elements of the trade, okay, were very, very important and gave me, you know, a good idea that we, you know, it could have been a good area to get involved in a trade. But that's absolutely fine, okay? Sometimes you have to just take a loss before you take a win. So what happens next? Okay, now I understand that these were the early buyers. Okay, these were the early buyers entering the market, which means that as price comes back down, okay, this is of course a liquidity sweep, and now I want to get involved in an entry. So I'm waiting for a candle to indicate to me that price is ready to reject. Okay, I want to see it take liquidity of another candle, and then I want to be able to get involved, okay, as we then push back to the upside. So let's see which candle we actually get. Okay, so after this candle we get this nice low test candle in here. Okay, so this nice low test candle, it tests the bottom of the range. Okay, it sweeps the liquidity of the previous candle. Okay, and then we get this nice strong push up. So at this point in time, okay, I look to enter the market. I look to buy at this level here. Okay, and I wanted to put my stop at around about 2 pips, okay, underneath this low point. And this is where I look to get involved, okay? And now, of course, we want to see a move away. Now, the overall idea would be to, first of all, target this high point in here for a nice 9.95R. Okay, so let's just have a look and see if we get any reaction at all, because in some situations, you're going to take both these trades and then you're going to just see 2 losses. And sometimes, you know, you have to just take those trades and you have to take those losses because, you know, if you don't take the chance, then, you know, you're never gonna be able to capitalize on anything, okay? Sometimes you have to take the risk or lose the chance. So it's very, very important to be able to still get involved in these trades if the, you know, correct entry criteria presents itself to you in alignment with your plan. So let's see what happens. Straight away, okay, we get a nice push up. And there we go, okay? The momentum comes into the market. It starts to move away very, very fast. Okay, and at this point, I believe I then moved my stop to break even. Okay, took the risk off the trade as it was running in profit. Okay, now, of course, this would have been my overall target, okay, for this trade, especially on this day. Now, I'm going to talk about the overall higher time frame targets that we also have, but first of all, okay, let's just work with this target just in here. So, okay, this can be seen as the first target. Okay, so let's just put this as, okay, the closed level. Brilliant. So at this point in time, we would be running at a nice 5.7R. Okay, now let's see what happens next. Okay, price continues to push up, not really much of a pullback. Okay, it pulls back a little bit now in here, before then continuing higher to target. Now, I think in this trade, I actually closed it at around about 7R, I believe. Okay, it was around about this area in here. Okay, now this was personally, okay, how I wanted to manage this position. Okay, I understood that it was coming into Friday afternoon. Okay, it's also based on my performance for that week. Sometimes I like to make sure that I end the week in a strong way, making sure I'm banking those profits. Now, of course, if the week had a different scenario, okay, or maybe it wasn't a Friday, then we could have maybe managed this position slightly, you know, less aggressively, and we could have actually looked to target more of a higher time frame target, okay? But of course, I was quite happy to bank this at 7R and just secure some profits, which is of course brilliant. And then of course, we did actually end up playing out anyway, which means we could have actually got, you know, the complete trade for 10R. Now, I want to just quickly touch on the overall higher time frame idea of this position. Okay, so if I just, you know, go down to the 15 minutes so we can see this entry, okay? So here you can see this is the trade. Okay, and you can see, of course, it touching that target. Now, if I go up to the 1 hour time frame, we can understand that the initial idea was that we were going to see price, you know, pull back into this range, and then we were going to see it impulse back to the next high point. Okay, this would have been the week high, which we would have expected price to smash through. Okay, so initially we could have held it to here for a nice 11R. Price actually comes all the way up and gives us a potential of 15R. Okay, and now if we really want to manage this on a much higher time frame basis, we could go up again to say the 4 hour. okay, and we could start to, you know, utilize the overall higher time frame ideas that we had initially, which was, you know, that price may continue to push all the way up into this much larger daily supply zone. So, okay, now imagine if we did hold it to this level in here, we would be looking at a nice 28R trade. Now, I wouldn't recommend necessarily holding this full volume to the whole 28R. Sometimes it's good to take partials, especially when we are managing these trades on a higher time frame basis. So you need to take that into consideration. But if we actually have a look now at where we are, okay, in the overall grand scheme of things, okay, the weekend happens, price continues to push up, okay, and then we pull back. And we are still actually looking to continue moving higher. Okay, you can see that we are now continue to go sideways a little bit, okay, as Monday plays out. It pulls back, it grabs the liquidity. That again is resting underneath this low in here, because sometimes it needs to generate that fuel to continue the move higher. So that's what happens in that situation in there. Okay, and then we can look for the overall higher time frame target. So again, if I continue to play price out now, okay, it starts to pull back again. And then there we go. Okay, we smashed the target and now we are moving continually higher and higher, okay, towards the overall idea that we had. So imagine you were able to hold this trade. We would be looking currently at a 37R trade. And this was a pure momentum trade, okay? It was purely based on the 1 hour structure, the one hour momentum, the 1 hour candles, and being able to read, okay, the areas of demand which were, you know, left behind at the extreme of that range. And then we were looking for that confirmation on the lower time frames. So here now on the chart, okay, I'm just gonna obviously place the entry that I took, and you can see both the loss and the win, okay, and the profits that were secured when we took this trade live on Friday. And that brings us to the end of this breakdown, okay? So remember, guys, okay, this is just one of the strategies that we use here at Tradedorks, okay? This is actually how I personally trade, but we do have other traders on the team, okay? People such as Radu, Ramir, Prince, they all have their own unique style of trading, okay? And it's down to you to go away, look at how we trade, and then either come up with your own variation of the strategies, okay, or simply just follow along with us, okay? We do, of course, offer signals here where we do like to, you know, offer insights into where we think price may be moving, okay? And then we do give those signals away to all of our members and community to ensure that they can, of course, bank profits while they are learning the skill for themselves. So don't miss out, guys, okay? You know, there's lots going on within the community here at Tradedorks. I hope that you took something away from this video and was able to really get an understanding of how we can utilize the lower time frames all the way up to the higher time frames. Of course, as always, if you did enjoy the video, remember to give it a thumbs up and subscribe if you are new. And I will see all of you guys next time, okay, if I don't see you in the Tradedorks Discord. So take care, happy trading, and I will see all of you in the next video.